Everybody, Colin Plume, CEO, Noble Gold Investments. Got my buddy here, Josh. My shirt's, I just realized, yeah, anyway, looking at it. So we've been working hard on this one. Jake Bell is also here with us, and we're going to dive into something that it hit the headlines. It's big in the news, but I don't think people really understand how important this is and how screwed up this system is in terms of the jobs report. So what we've done is we've done what the government hasn't been able to do, right, Josh? We're gonna expose, we're gonna solve the rigged, broken, and blatantly misleading data system that's been wrecking your retirement account for the last 8 years. And I know that's a bold statement, but I think as we go through this, you're going to be surprised to what we learn. Let me ask you something. If I told you the government tracks the economy using surveys, would you believe it?
Absolutely, yeah. I mean, it reminds me of when Elon was going into he had to go into the caves for the government workers in order to retire a government worker, all of their paperwork goes into some cave in the middle of the 200 feet underground, and they have to put it on like an actual conveyor belt to bring it up, right? I mean, that's it doesn't surprise me at all. That's how the government operates.
We're running a $25 trillion economy off phone interviews and spreadsheets from the 1940s.
Makes sense.
Yeah. And here's the kicker. The fake jobs data is destroying portfolios. It's destroying your retirement, your mortgage, your future. I mean, it's unbelievable. And we've done all the research. We're going to dive right into it. And also try to simplify this for people that are confused, because you see the jobs report come out and then you see 3 months later, you see them change the data. So the BLS data is used to set the Federal Reserve policy. It shapes investor decisions. It determines the public perception of the economy. Inaccurate data can delay interest rate cuts, which is what we're having right now. It misleads the markets and it damages retirement portfolios. When job numbers are revised down after the fact, it undermines trust and affects whoever's in office at the time, currently President Trump. So the Bureau of Labor Statistics, an independent agency for the Department of Labor, in July 2023, President Biden nominated Erica McAnterfer as the BLS commissioner. She was confirmed in January, and August 1st of this year, President Trump fired her, accusing her of rigging jobs data to her Republicans. And William Wachowski was installed as the acting commissioner. So those are some of the facts of what's just recently happened. We'll dive into this a little bit farther. Jake, are you here with us? Jake Bell, let's get Jake on here.
Good to see you.
How are you?
Good to be here. I'm doing well, thank you. And yeah, I sent to your team some photos of just a real basic layover of what's going on in the stock market. And I think this overlays nicely. So we're just going to go through this real quick. This is a one-day chart of the 4 major indexes. We got the Dow, the NASDAQ, the S&P, the Russell, all supposedly different segments of the market, all moving for different reasons. Why don't we go on to the next one? There's 4 here, the 1 day, the 5 day, the 1 month, and the 1 year. And I just want you guys to look at it just very simply. What do you observe in those charts? What are we seeing? And move.
1 day's down, the 2 day, the 5 day.
Move on to the next one there. And it's what I'm seeing is these completely uncorrelated, supposedly uncorrelated assets are moving in unison. Go to the 1 year. Look at these charts. Yes, there's a small degree of divergence between the 4, but they all move in unison from one another. So one of the themes I have for today is the need to diversify, to have uncorrelated assets, because what you've been told by your financial professional over the years is by having a diverse stock portfolio, you are diversified and therefore protected. And I mean, it doesn't take a genius just to look at those charts and see the major fluctuations are all occurring, not because of a company's competence, but because of what's going on macroeconomically. And these job reports and the volatility that we have working within our own, I don't know how to describe it, we'll say compromised government, is affecting exactly this. And it's affecting interest rates, as you said, and having something that detaches yourself from these traditional finance options is the only way to truly diversify and protect. And of course, that's what you offer through gold and silver and My Digital Money, which we'll get into. But yeah, the June and May job report number revised lost more than 250,000 jobs. That's huge, and that's destructive. I'll let you finish your point before I go on to my next there, and we can be done with this slide. We don't need a very in-depth analysis just to observe the obvious. Again, these four major indexes are supposed to protect and diversify you, and they're very clearly not. They are operating on macroeconomic waves. You're not investing into a company's competence. You're investing into the roller coaster that is our financial world today.
Yeah, and let's dive back into, so you get the jobs report, it comes with Bureau of Labor statistics. You think they're crunching real-time data, payroll data, W-2 forms. They're not doing it.
No.
What are they doing? What are they doing?
I mean, the government is calling 60,000 people and crossing their fingers that they answer, and then asking them questions, and that's literally how they get this.
So you're calling for the BLS, and you call me, and you go, hey.
Hey, call in. Just wanted to make sure you're employed.
And I'm actually on YouTube on my phone. Oh yeah, I'm employed. Absolutely, I've been working hard on I got a job here.
Yeah.
I got a job.
Or maybe you have 3 jobs, right? Maybe you do DoorDash, maybe you work part-time, and another job, and those count as 3 jobs.
So if I have 3 part-time jobs, that could be
that's considered 3 jobs to the BLS.
Okay.
Not 1 job.
So
even though you have 3 jobs and you still can't barely pay rent, it counts as 3 jobs.
Right. To the BLS. What about the fact that I'm an influencer? So I probably have, if you're talking to me, I probably have 6 jobs.
10 jobs. Yeah. I'm in the same boat. I'm in the same boat here. So it counts as 10 different jobs, and it's crazy how the government uses the same numbers that they've used from the 40s.
Right.
With all the advances that we've had, with all technology and AI and everything else, it's amazing how, and it makes you really stop and think. Like, to me, it's 100% politically motivated. Right? When we look at a chart here in a few, we're going to see the upward revisions for jobs under Biden, and we're going to see huge, stark downward revisions for Trump. And for me, that's totally politically motivated when you see this, because it 100% affects the interest rate, what the Federal Reserve does, what the stock market does. The stock market was booming when all of these jobs reports came out last year. And now that they're quietly revised, nobody cares, right? It's an afterthought.
So this chart shows, so you go to September of 2024, and the initial estimate is close to 250,000. Final revision is 200, around the same, actually higher. So this is under Biden.
Yeah.
Okay. Mm-hmm. Then you go to somewhere in between, maybe November, and it looks pretty scary, actually. You're looking at, this is probably right around election time. Yeah. And then you hit December, and final revision, it looks like the final revision keeps going up while Biden's still in office.
June, September, August. I mean, it's every single month. It seems like for the last 6 months before Trump got in there, they were revised up. And then you see in the December, as soon as December ends, you go into January and Trump took over, everything's revised down.
So did the math change? What happened?
No, the presidency changed.
The president changed.
I mean, that's the long and the short of it. It's these numbers have become politically motivated numbers as opposed to actual, real, concrete numbers, and it's really unfortunate. And it's just
even if you take out the political aspect of it, it's a clown show. We're using old systems. I mean, they can't. With what you guys just laid out, there's no possible way we have an accurate reading on what these numbers mean. We're polling a fraction. There's got to be a better way. And of course, Josh, you mentioned you think it's politically motivated, or people getting, skimming off the top of these systems. That's the first thing that comes to my mind after what we learned from Doge. So, who knows, but it doesn't work. It can't work. And these numbers are extremely important for setting monetary and fiscal policy. How is it that we are so behind the times in all this?
Yeah, and we had, so the facts are the current revision is the largest 2-month revision since 2009. And that's just the facts. Revised May and June job numbers revised down 258,000 jobs. I mean, it's extraordinary to see this kind of inaccuracy. So I think everybody is quite concerned. If Jerome Powell is supposed to determine whether to cut rates or do whatever he's supposed to do with rates, part of his mandate is jobs, right? I mean, that's part of what he has to do. And I think a lot of it is everybody's, looking for correct data to determine how they should do things. Now, with these jobs being substantially lower, it makes you cautious as an investor in any of the indexes that you showed, Jake, or you really have to rethink your strategy in terms of how the economy is going, right? It shows that we're going to have more people applying for unemployment. We have more people out of work than we thought. And obviously, as you said, Josh, the numbers are not perfect because if someone has multiple jobs, it counts as multiple jobs. And so and most people that have multiple jobs are doing it to try to get to one income, right? I mean, you're not going to have multiple jobs if your one job is paying it, right? So that's the other thing that's scary. I think that the multiple job scenario is very misleading because it's really you're working a bunch of gig jobs just to cover day-to-day.
So I pulled some additional information off Reuters, which I think are relevant here, a little adjacent, but still relevant. Our trade deficit, and good news, is down more than 60 billion, and that's positive. So hooray for us. Inversely, our U.S. fiscal deficit is up more than 6 billion, 6.5 billion, which is just about double what it was at this point last year. And so one of the things I've been touting here for several weeks is the biggest financial monster lurking underneath the surface is not only what's going on with our dollar and its actual purchasing power, but our nation's debt, which is still more than 120% of the GDP. And a lot of people have normalized that. It just doesn't make any sense. You cannot sustain like that.
Right.
So the fact that our debt, is growing is that same issue we've had with the previous administration. We're still trajectorying in that road, which leads to negativity within the stock market and traditional finance.
Right.
Again, decentralized, uncorrelated assets. The biggest piece of headline that I've seen over the last couple of weeks is actually the Genius Act. So I know you're heavy in, with My Digital Money, paying attention to the crypto space, but that bill that Trump signed, the Genius Act, was the first major piece of crypto litigation to be passed. Do you have any thoughts on that before? I don't know if you want to go there in this conversation, but I got a few things I wanted to list off. Did you pay attention to that?
I talked about it a lot in my last live stream. In essence, the Genius Act, it forces them to back it by dollars and or U.S. treasuries. And I think that's the real benefit to us as an economy is that you're creating a way for crypto investors to move in and out of different cryptos, keeping them, entertained in a stable coin. And then you're requiring that stable coin to be backed by dollars or U.S. treasuries, which we need.
Yeah, that consumer protection was a major element of it. And of course, it was the first piece of litigation that brought much needed clarity into the regulation, right?
Yeah.
Everything was just very vague. We didn't know what direction it was going to take. And that clarity is going to be crucial for more mainstream adoption. It's going to increase the speed, the volume of people coming in and out and lower those transaction costs. So that was very exciting. And the adjacent piece that I want to talk about was Bitcoin's reaction to that bill.
Mhm.
Now, obviously, Bitcoin has moved the lifeblood of Bitcoin and crypto in general has been volatility, huge ups and downs.
Yeah.
And of course, we saw it go up, very normal. And then we saw it since correct, very normal. But the fact that Bitcoin stayed within, I think it was within a 4% range from the signing of that bill on July 18th and till today, when it's sitting, I think, at 114, 115,000. The fact that that number, I mean, the ultimate form of analysis is price, right? And the fact that Bitcoin's price has stayed in a more condensed range, I thought was extremely beneficial.
Yeah.
Because what that proves, what that shows is Bitcoin's adoption has already happened, right? The major hurdles for cryptocurrency are behind us.
Yeah.
And the fact that it didn't jump 30% and then come crashing down another 30%, I thought was extremely positive for the crypto market in general.
Absolutely. Yeah. No, it's been interesting. I'm sure everyone's been closely monitoring the price. Get back to the BLS and kind of what we're our headline here. Josh, what do you think in terms of patterns? Like, what are some of the patterns that we've seen with these reports over the last few years that now, like, we have the firing, we are today, and we're starting to look at this a little closer. Like, what's a pattern that we've seen over the last few years?
That the rate hikes and that the statistics from the government are politically motivated. I mean, that's what I get from it. That's what it boils down to me. When we were talking about the biggest revision since 2009, well, a lot of us remember the 2008 crash, right? And 2009 crash.
Right.
And that was started. I mean, I remember getting the reports where they revised all the numbers for the last 6 months. Like, oh, sorry guys, we've been in a recession for the last 6 months, and that is what triggered the huge bear market back in 2008, 2009. So it reminds me of that, and it almost sets up exactly how it was set up in 2008, 2009, where the government's coming out with these fake numbers, and the economy keeps booming, booming, booming until they do the revisions.
Mm-hmm. Yeah.
So to me, it's 100% politically motivated.
Yeah, and let's ask the real question here: who wins when the job numbers are wrong? I mean, politicians, they want to make it good. They want the good data. They want the good poll numbers. Wall Street, buys early and hype, sells before the revision. The Fed delays rate cuts, which is what's happening, or hikes based on fake strength. So you have these three entities that are, benefiting from this inaccurate information. The people that get hurt the most are the everyday investor that's not having the time to research this and dive into it. And that's why we wanted to do this today, because I think it's really important to not take the statistics that the government's using and really bear all your investment based on that, because they're revising things constantly. I see the economy struggling. When the job reports would come out, I wouldn't see it. I don't know a lot of business owners that are fervently hiring, and yet you see these reports come out showing that the jobs are fine, and now we're seeing that they're not so fine.
Yeah, the whole point of this is to give us a gauge, to give us a pulse of the economy. And it's not accurate whatsoever. They're just being out on the streets and talking to a cab driver is going to give you a better indication on how things are going than these job numbers. They're useless, and they're hugely impactful into, again, monetary and fiscal policy. Something needs to change there.
Yeah. And there's no penalties for giving out the inaccurate data. Just a few things that happened last year. August 2024, technical glitch, delayed jobs release. And some firms received the data early. March 2024, BLS economists leaked data to Wall Street firms. So as we're saying, like, they're giving it to Wall Street, and then we're getting it later. And then, so May and August of last year, the two reports were given to Wall Street first. I mean, this is supposed to be government information that's supposed to come out to the public, not to private entities that they're working hand in hand with. There's no formal audit, and there's no penalty. So there's no way that you're going to make sure that they're going to do the job correctly. Except
There's no
you do a fire, which is what President Trump done. Now, a lot of people are saying, "Oh, now it's going to get worse," or this is like, someone that's you're going to make this situation. And it's like, in my eyes, like, how could it get any worse? How could it get any worse? We've had the biggest revision since 2009. It's already been terrible. And so the stock markets, all the markets are down, even though you mentioned they're all supposed to be, separately correlated. And so investors are getting hurt. Now, who's benefiting? Do we have the Nancy Pelosi chart here? Let's pull up Nancy. But we'll get, if you look at Nancy Pelosi, and I looked at this yesterday, hopefully we can get it up here, but Nancy Pelosi's portfolio since January of 2024 is up 54%. So, and you look at
beating every major Wall Street professional,
every
Buffett,
Wall Street professional,
Paulson, right? Everybody.
What's her net worth? Like more than 400 million on $175,000 a year salary? That's
say that again, Jim.
I think her net worth is more than 400 million, and her annual salary as a government employee is less than $175,000 a year.
Correct.
That's incredible.
Yes.
Wow, how did she do that? She's a genius.
Yeah, so people with inside information are able to, and part of this inside information is a job report. I mean, this is it. So this is important. The firing is important. And we have easily solved this issue. Okay. There's payroll data out there. ADP, paychecks. There's IRS tax data. We have this data. You can get it. These companies have this information. I own a payroll company, Guardian Payroll. If we needed to get this data out, we could submit this data. There's a way to do it that's not surveys. Obviously, we know that people will lie in a survey. They're not going to tell the truth. It's not an accurate way to gauge, especially something about a job. People are uncomfortable to say that they don't have a job. So I think there's data out there. I mean, that's what Doge was all about. Let's get data. Let's get to the right point where we're using accurate data. You need to go away with this old system. This old system just doesn't make any sense. Let's talk about what we know is that for the last few years, these inflated numbers helped Biden, and now we're seeing massive corrections under Trump. And the errors were huge. These were not like typical 2 to 3% corrections. I mean, we're talking about hundreds of thousands of jobs wrong. And last year they reported that they were fine, and now we're seeing this massive correction. Was it incompetence? Was it intentional? Who's accountable to these departments? How can investors protect them? Is inherited a bad economy, right? I mean, that's the data that's coming out. So I think as people that are watching these things constantly and looking to protect themselves, that we do know a few things. We know that you shouldn't have all your eggs in one basket. We also know that we're going to go through some turmoil this year because there's 258,000 jobs that people did not get. So the economy, the job growth is down. We're in a bad place, which actually aligns more with what we've been talking about. The economy doesn't feel that.
That's what we've been talking about for the last 6 months to a year. I mean, we've been talking to everyone that I talk to. We have redemptions are way up here. It's people are hurting,
right?
And we've talked about this for the last year. I mean, it's people wouldn't be selling their gold and silver if they were flush, right? If they had money. It's kind of a last resort. Hey, before I lose my house, I got to sell my metals.
Right. Yeah, and I think that the key here for everyone that's watching this is there's a few things that are going to happen. is that, and part of the reason that he fired her is that once we now know that the jobs are where they are, it puts pressure on Jerome Powell to lower interest rates. A lot of this is geared towards that, which is what President Trump wants, and it actually, as an economy, is what we need right now. We need a little bit of a pullback. But the pullback does a few things. It also says the dollar's not as strong as we think it is. It also says that, and I've been saying this for a year, that we're going to do quantitative easing. I promise you. And the last time we did quantitative easing and we pulled down rates aggressively, 2009. 2008, rates got high. We pulled rates low. We did quantitative easing. Gold from 2009 to the end of 2011, silver both went on historic lows. It's documented. So if we do those things again, and we're leading up to that, all this information is leading up to pressure on Powell. Powell will have pressure to lower rates in September. He's going to have that pressure now. He may step down. Who knows? But they're going to do quantitative easing, in my opinion. They're going to lower rates. I think, Powell's out of office in May next year. I think before he's out of office, we're going to get rates down at least 50 basis points. I think we do some quantitative. I think you're going to see a little bit of a boom in certain areas. But we need more liquidity out there. That's part of the reason that the jobs are down. The business owners are strapped for cash. They don't have liquidity. Rates are too high. So this will add liquidity and growth. And President Trump is a growth president. Every way you look at it, he's focused on growth. The tax bill is a growth bill, right? He wants to get more money in entrepreneurs' pockets to grow the economy. This is the next phase of that. So, Jake, anything you want to wrap with here? Thoughts?
What did you guys think of that interview with Trump and Jerome Powell at the construction site? Did you guys see that?
Yeah.
I have never seen someone shrivel up so quickly on camera than when Trump handed him that spreadsheet. Right. I wasn't sure if that feud was just a look here, smoke and mirrors, real things happening over there. After I saw that, I agree with you. I don't think Powell's long for his position. Yeah. They've been a little delayed. I've actually defended a lot of what he's done over the last several years. I think they've kind of been backed into a corner because of the previous administration. But here we are. Everything is evolving so quickly, and they are not responding accordingly to put us competitively in the world market. And that stunt, when he did that at the construction site, they're both wearing their hard hats, and Jerome had to look at the extra $1 billion or whatever the figure was that it cost. It was quite entertaining television. Whoever has not seen it, go back and just watch it. It'll take you 30 seconds. It's beautiful.
Yeah, I mean, who remodels their house while you're late on your mortgage payments, right? I mean, that's in essence what's happening there. We're $37 trillion in debt, and they're doing this massive remodel.
Yeah,
it just
for like $2 billion. $3 billion is what it's going to cost. How big of a building are they possibly making? What? I mean,
why are we paying for it, right? The Federal Reserve is an independent, non-governmental agency. Why are we paying for it? Why am I paying?
No oversight.
So,
yeah, absolutely. And now we're proving that a lot of these government agencies are giving us false data, and we're supporting it. So, listen, for anybody that wants to learn about what we do, real assets, hard assets that I predict will do very well in the next few months based on what we're just seeing, based on quantitative easing, based on them lowering rates. This is all leading up to lower rates. I can predict it right now. I can tell you where we're at. Call these guys. Call Josh. Call Jake. They can walk you through. These guys, live and breathe this stuff. So if you're looking to get the physical, these are the guys you want to talk to. They're going to be with you. They'll mentor you. They'll teach you about metals. They'll be with you for the whole time. And thanks to everybody that came on today. Hopefully it was insightful and gave you a lot of good information. And definitely send in anything if you're interested in the next report. But hopefully this broke things down in a simple way, and we gave you a way to resolve it.